Last Tuesday, we talked about a failure. First, we have a VCP pattern showing up here, breaking out, and this failure bar changed everything. That's happened on 21st of February, Friday. This is a failure bar that reversed this bullish setup to the upside. And it's slightly coming down. First target is met within 1 or 2 days. This is a first target. And I call for a second target, which is a second support. It's right at this swing low support zone. And we're still testing the swing low support, but do you have any bullish price action? We only have 1 day bounce up here on Friday. Supply has been increasing. We have a potential reversal, but bear in mind that this is not a good bar, because even though we have quite a bullish widespread bar, but it did not overcome the high of Thursday. Okay, this is the commitment bar to the downside that it needs to overcome. But now change it to here. That's the bar, the commitment bar to the downside that it needs to overcome in order to flip it to the upswing. On Friday, we have 1 day attempt to reverse because it's right at the support. Volume has been increasing. Some traders or investors, they bought the dip, bought right at the support. But yesterday, on Monday, get a reversal straight away. This reverse everything suggests that the momentum is still too strong, and that's reflected in the bar, the price action. Look at all this widespread bearish bar. That's comparable to this section here, here, and here. But I will say that's 1, 2, 3. Segment 1, at least we have a few attempts to rebound. First, after this change of character bar, we have rebound 3 sessions, and then another rebound 2 sessions, and also this good rebound. Segment 2, we have contraction of the volatility, totally different. That's bullish, that's bearish, that is an automatic rally. Third segment is different from segment 2 because that's the bearish texture. Third segment is comparable to the first segment, but this is worse. Why is it worse? Because even if we compare to the magnitude to the downside, here for the first segment, we have a few attempts to rally attempt. But here, we have continuation to the downside for 1, 2, 3, 4, 5. At least 5 sessions, plus 1 attempt to rally and then get hit back immediately. 6 sessions going down. In terms of the supply level, this is comparable to here. That's not great. It's testing the support zone. If we compare the momentum, that's a lot greater in terms of the bearish momentum is a lot greater than first segment. Likely we'll see it overshoot and coming back down, testing this support level 5750 or 5700. So let me zoom out a little bit, and we have a gap somewhere around here. That's the gap. We still have another layer or another zone, provide some cushion support. If we get a breakdown, then likely we should see some acceleration to the downside and coming to test 5700 level or this zone before we see a meaningful rebound. This will be choppy. It could end up as a bigger trading range. Previously, it could be something like this. But if we have a weakness, then it could become like this and to chop around. If we compare the volatility, this doesn't look great because we don't want to see the increasing of the volatility in every swing. That's a characteristics of the bearish distribution structure, but still yet a bit early to jump into that conclusion. It's going to take time to heal and the market will be choppy, and that's why the immediate support seems like going to break, and likely we could see a test of the zone at about 5700. So not that far, another 150 points to go. If we going to break down, that should create some localized selling climax and going back up within the range. So far, medium term, this is still a trading range, but the immediate term, this is still a downswing. Supply is still high, not a great thing. This could be some choppy movement and something like this. And even if it go up from here, this is still not a good trading environment because it's way too choppy. Long-term structure, it doesn't change. We still have a high, low structure. Uptrend is still intact, but there is a change of character chopping around. If we compare to the magnitude to the downside here, compared to this, or even here, third segment is still better than first or even second segment. Okay, long-term high, low structure is still up, but immediate term is slightly coming down, and we need to see whether it will find some aggressive demand right at the support zone. Let me go to the Nasdaq. In terms of the Nasdaq, there is a breakdown. So first, we have this bullish structure. Similar to S&P 500, there is a failure bar that changed everything. That become bearish. In terms of the wave to the downside, this is stronger than here. This is the worst or the strongest down wave that we have ever seen within this structure. So suggesting that that's like a sign of weakness. That's the opposite of the sign of strength. Let's check the supply. Supply has been increasing. There is the characteristics of the distribution. There is some distribution structure within this bearish base. There is a base right here, and this looks like a up truss of the distribution. Breakdown, in order for it to violate this bearish distribution, it need to quickly climb back up and go back inside the range. But if we going to see some weak movement, and it's likely going to come down, so watch out for a break below this long-term up channel. The long-term up channel is still intact. We have a high, low structure. The next swing low that we could anticipate is somewhere around here. That's coincide with a horizontal support at about 20K. Another 400 points to go. So I wouldn't be surprised that we could have another quick flush, and then coming back up. Here it looks like a localized distribution and quick flush, and then get a relief rally up. That's still possible, and it doesn't violate the long-term structure. If it does that and bounce back up from the demand line, or something like this, bounce back up, here bounce back up, here we could also have another bounce back up from about 20K. But in terms of the supply level, has been increasing from here to the current swing. Not a good sign, although this is a slight increment, but that's likely going to see some more weakness ahead given the strong impulse movement to the downside, and also do have a decent or the aggressive demand. So look at all this demand. Demand looks relatively weak on the way up. We're likely going to see some quick flush to about 20K, and we need to see we'll get some aggressive buyers come in to support the price. Long-term wise, that's still a up channel, very clear, but short-term movement or immediate term, we're likely to going to see further weakness, have a flush to about 20K. And in terms of the legged, the Russell just break down here. There's a break below this level, 2200. Attempt to rally up, but get rejected. And yesterday, that's the biggest movement, minus 2.7%. That's 2.9%. That's on par with this bar. So breakdown from here looks like the structure, shoulder, head, shoulder, breakdown, and it's going back to 2000 based on a 1-to-1 projection, maybe slightly overshoots to here 1960. 2000 is the first support that we're going to see for Russell 2000. But long-term wise, this is still likely a accumulation structure, but we have a bigger sideways movement trading range. Another choppy session, choppy move. Dow Jones have a obvious support at about 41,700. In terms of the immediate movement since the breakdown here, breakdown, inability to rally up, and then have a reversal rejection on Monday yesterday, suggests a continuation to the downside. To find a support at about 42,000. So somewhere around here could be the immediate support level. In terms of the supply level, similar to Nasdaq 100, supply has been increasing. That doesn't look constructive. Medium-term structure is still a trading range. Sideways movement likely is going to 42,000, and we need to see whether we'll get some decent buyers show up here and then bounce back out from here and to consolidate within this zone. But so far, we need to be cautious because supply has been increasing and volatility is getting bigger and bigger. Is more on Nasdaq 100 and also S&P 500. Need to watch out for this. These are the characteristics of a bearish distribution rather than an accumulation structure.